Yuka Royer is here in studio. Good to have you with us this evening, Yuka. So US President-elect Donald Trump, more announcements coming from him. He's chosen a Wall Street executive and a known China hawk to serve as his Commerce Secretary.
Well, Sharon, Howard Lutnick is the billionaire head of financial firm Cantor Fitzgerald and co-chair of Trump's transition team. He has been a key economic advisor to the president-elect and a key advocate of using tariffs as a tool to protect American industries and jobs. Trump, of course, has promised to impose a 10 to 20% tariff on all imports and 60% on goods coming from China. Lutnick had also been considered for Treasury Secretary, Sharon.
Staying then in the US, Google's lashing out at the Department of Justice over a report that it may be forcing the tech giant to sell off its browser Chrome. How would that work?
Well, Bloomberg reported late on Monday that the Department of Justice in the US will ask a federal judge to force Google to sell Chrome, which could go for as much as $20 billion if it were to happen. The judge ruled in August that Google was running an illegal monopoly in the United States in the search market. Bloomberg said that Justice Department will also propose measures related to artificial intelligence and the Android operating system. Google reacted angrily to the article.
The DOJ continues to push a radical agenda that goes far beyond the legal issues in this case. The government putting its thumb on the scale in these ways would harm consumers, developers and American technological leadership at precisely the moment it is most needed.
Meanwhile, crisis hit Boeing. It's starting to lay off thousands of workers in the US as part of its cost-cutting plan.
Well, the aerospace giant started to send out its first redundancy notifications this week. Around 2,200 workers in the state of Washington, which is home to many of Boeing's oldest factories, are set to be laid off on December the 20th, just a few days before Christmas. Employees in South Carolina, Oregon and Missouri are also set to be impacted as part of the plane makers' plan announced last month to cut 10% of its global workforce, or around 17,000 people. The laid-off staff will stay on Boeing's payroll until mid-January. The news comes as Boeing is preparing to finally restart the production of its best-selling 737 MAX after a strike by more than 33,000 machinists in the Seattle area paralyzed production for more than 50 days. This dealing a further blow to the plane maker that had been plagued by production delays and quality issues and making billions of dollars in losses.
Let's take a check on the markets then, Yuka.
Well, geopolitical tensions rattled global markets again, with concern over an escalation in the conflict in Ukraine weighing on investor sentiment after Vladimir Putin eased rules on Russia's use of nuclear weapons. Wall Street, though, appears to have shrugged off those fears, ending Tuesday on a mixed note, with the Dow Jones Industrial Average closing in the red. The Nasdaq, though, gaining 1%, lifted by some tech shares. Chip designer Nvidia jumped almost 5%, a day ahead of the company's third quarter earnings report, as analysts predicted higher sales and profits. The stock has gained nearly 200% so far this year.
Here in France, then, Yuka, political chaos caused by the snap elections during the summer. It's all made the country less attractive to foreign investors.
Well, according to a survey of 200 heads of foreign-owned companies that accountancy EY carried out, half of them say France's attractiveness as an investment destination has declined since the June elections. 49% said they rolled back or delayed investment plans in the country, while not cancelling any ongoing projects altogether. 59% cited political and regulatory uncertainty as a top concern as lawmakers continue to fight over next year's draft budget. The level of public spending and a potential increase in household tax burdens were also flagged by investors. France has kept the top spot in EY's annual survey as the most attractive investment destination since 2019, but that could be about to change, Sharon.
Finally then, in business news, German police have moved to break up a protest camp near Tesla's gigafactory outside Berlin.
Well, environmental activists have been occupying a pine forest near the plant since February to protest at Tesla's plans to expand the site, which they say will lead to deforestation. Some of them were holding out in tree houses on Tuesday as German police climbed up ladders and cut down rope structures to try and clear the camp. Police were initially deployed at the campsite on Monday to search for unexploded bombs from World War II, but tension mounted as activists refused refused to evacuate the area. Protesters, though, remain defiant.
Of course we'll stay here as long as we can. There are still people in the trees here resisting. The situation is dangerous, of course. It's slippery, it's raining and it's freezing cold all day. But we will continue our protest. We'll stand our ground as long as we can, and then we'll see.
And that's it from the business desk.
Thanks so much, Yuka.